good morning. You're watching The Market right here on ET9 with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash here in the studios. And for the SGX Nifty, it seems like it's going to be once again a bit of a quiet start. A green day yesterday, managed to scale up near about almost 1% in the green, but a lot of data points that the markets have to digest this morning. Of course, the big one is the US CPI data, largely flat despite coming in higher than expected. But you know, the intriguing bit is that the US equity markets have completely chosen to ignore that. The Nasdaq was up about almost 0.7% overnight. You had a flat move though on the S&P as well as the Dow. The SGX Nifty mildly soft, but yeah, the markets I guess have already priced that in.
Yeah, you know, typically when you see a uptick in inflation and when the inflation uptick is after a flat curve, it just makes you wonder that is worst of the inflation print behind us. If worst of the inflation print is not behind us, then equity markets automatically should have reacted. But they did not react yesterday because on Monday the CPI inflation data for India was high, and last night even, like Aisha mentioned, even for the US market. But haven't we learned this? That markets never react to the same thing twice. The fact that equity market did not react yesterday, the bond yields were stable, dollar index is at still 103, the VIX, which is the most important benchmark of near-term fear, is under check.
It's down 7% in fact.
Yeah, it's under check, it's below 20.
Yeah.
That just tells you that equity markets are this time not panicking because of inflation. This is the same data point which in a sense had set cats amongst the pigeon when it started coming out. So markets are saying that, okay, let's ignore this seasonality, but directionally, equity markets are telling you that inflation in 2023 will remain under check. Bond market did not show signs of nervousness yesterday for us and for US markets last night. That's my limited point. Is inflation now an old story?
Yeah, the US 10-year at about 3.7, and you have the SGX Nifty this morning. Well, it's indicating a muted start of down about 0.5% or so. Let's focus on our markets because the key driving factors yesterday was the recovery that we witnessed in banks, not just the large caps, but across the board. PSUs as well joined the party, and then a lot of heavyweights really led that up move. The likes of Reliance Industries, HDFC Bank. And Nikunj, the question is, are we set to break out? And if so, what is going to take leadership?
Avan, I think based on the current circumstances, you cannot make a case for a breakout because time and again the breakout trade has failed and the breakdown trade also has not worked out in favor of the bears. I would say that rather than looking at the Nifty percent, talking about Nifty levels, let's look at the internals. I would stick my neck out and say that there are two stocks which matter. First is Reliance, and guess what? Reliance has started moving. Last couple of days, Reliance is showing signs of mild appreciation. Then the other one is HDFC Bank. So these are the two stocks which in my book, they hold the key. So rather than looking at the Nifty and then making a market view, look at these two stocks. If there is a little bit of elevation which comes in Reliance or for that matter HDFC Bank, I think that would be good. Reliance in this week has appreciated by 1.5%. That's approximately 2%. HDFC Bank also posts numbers now. Seems to be in some kind of an outperforming groove, so to speak. The HDFC Bank data point will just come up on your screen. This week and last week, HDFC Bank has outperformed. So my sense is that these two stocks, they hold the key. FIs have turned net buyers. But the breadth of the market is something which is not giving you that much of confidence. So it could be back to, again, few stocks, and a lot of activity could be centered around banks. So I think banks is the leadership, for markets to go higher, you need banks. IT has done the trick already. And then within that, I would isolate Reliance, like I said, as a stock which will tell you which way markets would move in the near term.
The good thing is that you've got FI participation, which is back. I mean, call it a function of all the block deals which have been happening off late. But yes, they've been buyers for a third consecutive day. On that note, let me also welcome on board Ed Yardeni. He joins in right now to talk about the US CPI print. Ed, hi, good morning and good evening to you. The Jan CPI data, it's risen about 6.4%. The markets were anticipating 6.25%, higher than the market anticipation. It's a different thing that equity markets overnight have completely chosen to ignore the data point. What's it telling you about the trend ahead?
Well, I think the data was pretty close to expectations. And I think that there's still a perception that the Federal Reserve is looking for a restrictive level of the Fed funds rate, and then they're going to keep it there. So I think what the inflation news confirmed is that once the Fed gets to where it wants to be, and everybody seems to agree at this point that it's somewhere around 5 to 5.5% on the federal funds rate. Once they're there, they're going to keep it there through the end of the year. And I think the market's concluded that the economy can live with it. Economy's actually been growing. We've been debating soft versus hard landing, and right now it looks like no landing.
Ed, the narrative on the inflation is still quite dim. But if I frankly look at the bond market and the equity market, and even the dollar index, these three basic indicators, which in a sense are near-term mood indicators, last night ignored the uptick in the US inflation data. So from an equity market standpoint and a bond market standpoint, is inflation an old story?
Well, I don't really think it's an old story. We're definitely going to be very anxious once again once the February data comes out in March. So I think we're going to all be looking at these numbers very carefully. And I don't think we want to be too confident that we're not going to have some problems along the way where inflation might be higher than expected. But generally speaking, I think the Fed's going to be focusing on what's called the consumption deflator, the personal consumption deflator, rather than the CPI. And I think that news will be out in a couple of weeks. And we know that the December consumption deflator was up only 5%. So it's not going to, I think the next area is 3 to 4%, maybe by the end of this year. And then the following year, maybe 2.5 to 3.5%. So I think everybody's kind of concluded that it's going to take a while to bring inflation down, but the Fed may actually have it right.
And just to summarize with one final question, what is the bigger worry for the world? Is it recession or is it inflation? Because they both cannot coexist.
Well, there's a perception that the only way to bring inflation down is with a recession. Historically, that's been the case. But I think that in the United States anyways, the reason we haven't had a recession so far is because we haven't had a credit crunch. The credit system is actually very strong and has been able to deal with these kind of interest rates. I would say that we've seen goods inflation coming down dramatically. And I think we will see the services inflation rate come down in the second half of the year. So I'm in the disinflation soft landing camp. And I think that's still a plausible scenario, recognizing that there's alternative risks.
Appreciate your time, Ed. Thanks very much for putting those numbers into perspective and your expectations as to what the US Fed could likely do. Let's get a move on then and hear it out from commodity guru Jim Rogers. He said he owns commodities like gold and silver. What's his view on the US dollar index? Let's listen in.
Times, as you know, I'm sure you watch ET now, many times gold has done badly no matter what's going on in the world. So, I wish life were so simple. Dollars, I expect the dollars to go higher before this is over, because when we have turmoil again, everybody's going to look for a safe haven, and they think the U.S. dollar is a safe haven. It's not, but everybody thinks it is. So I own a lot of U.S. dollars still. But if it ends, or if there's a ceasefire, everything is going to react. Stocks are going to go up a lot. Bonds will go up a lot. And oil will go down. Grain will go down. But what I plan to do, if that happens, is to buy grain and to buy commodities, because that will be a buying opportunity.
Okay, on that note, let's welcome on board our chartists and ask them about what the trading day ahead is looking like. Kunal, Naresh join in, and as always, Kunal, hi, good morning. Let me start off with you. Good day yesterday. We finally inched closer to 18K on the futures. What next?
So yeah, good morning, Aisha. It was a good day for the markets yesterday. Managed to break out back again about that 17,800 plus mark. In fact, we closed about the 17,900 levels. There was a good amount of short covering as well on the indices, both on the Nifty. In fact, specifically on the Nifty as compared to the Bank Nifty. And I think more predominantly the larger cap names making a comeback, Reliance making a comeback, ICICI Bank making a comeback again. I think all of those were sort of standout features for the market. But then I think we still not confirmed a breakout above the 18,000 mark. So the range which was at 17,800 plus or minus 100 odd points, that has now expanded slightly to maybe 18,000 levels on the upside and 17,600 as a support for the Nifty. So we'll have to break past about this range of 18,000 as a resistance for the index to start an upward trending mode. But as of now, it looks like that the bias is still bullish, and any kind of an intraday dip or a short-term correction is generally taken as a good buying opportunity.
Naresh, is the breakout now, or the Nifty breakout, slightly more reasonable? I mean, do you think this time it's different, or it's old wine, new wine in old bottle?
So the way to look at the Nifty breakout right now is the possibility increases for the fact that the two largest weights in the index have done nothing for the last 2.5 years. So if you look at Reliance Industries today, which is closer to 10% weight in the Nifty, the stock was at 2350 back in September 2020. Then you look at HDFC Bank, the stock has done nothing over the last roughly around 2 years. In January 2021, the stock was at 1650. Today we are at 1650. Now, given that HDFC is merging with HDFC Bank, both the stocks have started to move in line. So that basically is 25% of the Nifty. Now, this can be the fillip. Now, back in June 2022, we had a very similar case where the whole Bank Nifty was available at the same price as pre-COVID. And the Bank Nifty took leadership. And now, even in that bounce, HDFC Bank did not see a major move compared to the rest of the name. So what we see is we just need a little bit of a fillip across the world, or say a stability, and the chances keep on increasing because these two names have a possibility of a major move going forward. And they've gone through a 2-year correction, even though when the markets have done well. And that would imply 25% of the Nifty doing well, which could easily give a fillip. So overall, the bias is positive, and these two stocks are what I'll be watching out for.
Trend which I want to flag off, and this is something which is not in sync with what we are talking about in Nifty, because Nifty did make a comeback. FIs have turned net sellers, banks are showing leadership, ICICI Bank is up, Reliance is picking up. But look at the result reaction. Info Edge just went to cleaners. All cargo yesterday, the back of the stock was broken. City Union 11% down, Nika 5% down, Balkish Industries 1% down. What is the similarity? Big cuts. Second similarity, result disappointment. So in the mid-cap space, if you are missing the mark or you off the mark, if numbers are below estimates, if there is a business transition issue, then those businesses, those stocks are getting hammered. Every company has a different unique challenge. So there is no trend here. All cargo, global business, City Union contracting their book, Balkrishnan Industries, Europe is down, Nika, there is a slowdown in terms of the lifestyle business, what they're exhibiting. So Kunal, it's a trend for me that mid-cap stocks are overreacting to bad set of numbers, and typically that's a sign of market weakness.
Yeah, so the market breadth is already extremely weak. In fact, most of the mid-cap names are actually trading at much 52-week lows or multi-month lows for themselves. So, it's the mood of the market right now that, to try and, for stocks, good news is not taken with a positive stride. I think except for maybe a few large cap names like maybe ITC or such other stocks, there are hardly any major stocks which have actually reacted extremely positively. In fact, even L&T post its results was actually showing a lot of consolidation rather than any kind of a major breakout. So I would expect that this is the tonality of the market right now, that bad news is taken with a lot of harsh reaction from the market participants, and good news probably lets the stock consolidate further.
All right, let's get in some top recommendations going and individual stock ideas from our chartists as well. And Naresh, what is it that you're flagging off this morning?
So continue to like Reliance Industries, which has made a base around the 2300 mark. The stock was at 2370 in 2020. It was at 2300 odd. in a windfall tax. Then in Russia, Ukraine made a low around 2200. In September also it made a low around this price point. And yesterday the stock made a comeback and on expected lines and is now crossing the 2-week highs. So out here expecting this bounce back, this could be a short-term bottom as well as a start of a new trend possibly. So the risk reward still looks interesting. A stop loss at 2300 and a target price of 2500. Second is a buy on ICICI Bank, which is trying to give a flag breakout and overall has made a base around 800 to 850 zones and now could be starting up the leg up. A stop loss at 850 and a target price of 920.
Okay, Kunal, let's get your top recommendations.
So again, sticking to large cap names, the first one is ICICI Bank, would suggest that as a buy. Expecting a breakout back again for ICICI Bank, even after this 2-3 days of very tight consolidation for the stock. 888 as a target for the stock and stop loss at 850. And the second would be ITC, the stock making a comeback. I think it's almost closer to its previous major highs, 385 plus. Would suggest a buy with targets of 396 to 400 approximately and stop loss at 375.
Okay, on that note, we're going to slip into a very quick break, but don't go anywhere. Lots line up on the other side. Of course, all the stocks in news this morning and lots of trading strategies.
Co-powered by Bandhan Bank, आपका भला सबकी भलाई.
When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's fastest growing bank. Bandhan Bank, आपका भला सबकी भलाई.
Let's you and me step out and see how blue the sky, how tall the trees. Let's you and I step out to find how far we go, how deep the sea.
Skoda Kushaq is India's safest family car. Protect what matters. Skoda.
जब आप आगे चलते हैं तो बहुत कुछ पीछे छूट जाता है और जब आप रोज 10,000 स्टेप्स चलते हैं तो किसी की बिल्डिंग की लिफ्ट पीछे छूट जाती है तो किसी की लाइफ से स्ट्रेस मीलों पीछे छूट जाता है. यही नहीं, आपके आदित्य बिरला हेल्थ इंश्योरेंस प्लान्स के प्रीमियम की टेंशन भी पीछे छूट जाती है क्योंकि आपको मिलेगा अप टू 100% प्रीमियम वापस एज हेल्थ रिटर्न्स और सीमलेस हॉस्पिटलाइजेशन बेनिफिट्स भी. सही सेहत की शुरुआत अभी करो.
हो गया इंतजाम.
किसका?
गुड्डी की फीस का.
दिखा. 20,000 का लोन तुरंत. पता है कौन दे रहा है, ब्याज कितना है. लोन विनियमित संस्थानों से ही लें और कर्ज उतना जितनी जरूरत, वो भी जांच कर. हो गया इंतजाम. पगार एडवांस में भेजिए.
आरबीआई कहता है
सही वित्तीय बर्ताव करे आपका बचाव.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
कार इंजन एड ऑन बारिश के लिए
ले लो सर, क्या पता कल क्या हो जाए।
एक काम कर, एलियन अटैक कवर भी ऐड कर ले।
हाँ? कौन सा?
और डायनासोर डैमेज कवर भी। डायनासोर ने टक्कर मार दी तो क्या पता कल क्या हो जाए।
मोटर इंश्योरेंस में जबरदस्ती के एड-ऑन्स। चूज द एड-ऑन्स यू नीड ऑन फोन पे। टेंशन फ्री इंश्योरेंस।
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
यार अजय, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC हर पल आपके साथ।
पुत्र वीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी।
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, टिके टकाटक।
जब आप आगे चलते हैं तो बहुत कुछ पीछे छूट जाता है, और जब आप रोज 10,000 स्टेप्स चलते हैं तो किसी की डायबिटीज की चिंता हमेशा के लिए पीछे छूट जाती है। किसी के फैशनेबल कपड़े ना पहन पाने की वजह पीछे छूट जाती है। यही नहीं, आपके आदित्य बिरला हेल्थ इंश्योरेंस प्लान्स के प्रीमियम की टेंशन भी पीछे छूट जाती है, क्योंकि आपको मिलेगा अप टू 100% प्रीमियम वापस एज हेल्थ रिटर्न्स और सीमलेस हॉस्पिटलाइजेशन बेनिफिट्स भी। सही सेहत की शुरुआत अभी करो।
Come what may, with Apollo tires, have a wonderful day.
When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's fastest growing bank. Bandhan Bank, आपका भला, सबकी भलाई.
Welcome back. Still tuned into the market and all eyes on the aviation space as it was a mega deal for Air India. The Tata Sons chairman N. Chandrasekaran said that it's a milestone in India, a moment for India-France relations, as the company has announced a mega deal to buy 250 Airbus aircraft to expand the Air India fleet. The deal is expected to be the largest ever deal in the global aviation industry. Air India is now going to get 40 wide-body long-range aircraft and 210 narrow-body aircraft in what is expected to be a deal worth $100 billion. Let's listen into what N. Chandrasekaran said, as well as the Airbus CEO, regarding this deal.
We have signed a letter of intent to acquire 250 aircrafts, 40 of them on the wide-body A350, which we will use to fly all ultra-long distance across the globe, and 210 narrow-body. And we have also have significant options to increase the fleet order once we grow.
Historic moment for India, for Air India, and for Airbus. And at Airbus, we are very proud and grateful that the Tata Group has chosen the A350 and the A320neo to script Air India's revival. The magnitude of the Air India order, the size of the 250 planes that Chandra just explained, demonstrates the appetite for growth in the Indian aviation industry. It's the fastest growing in the world.
In fact, Soumit joins in from our research desk to tell us exactly what this deal means for the aviation industry. Soumit?
As you mentioned, that this is the single largest aircraft order in history that we have seen. Nearly 470 aircraft has been ordered by the Tata Group, and that could be for Air India, Vistara and Air Asia as well. Now, Airbus order stands at close to 250, while the Boeing order book stands at close to 220. And in 2011, American Airlines had ordered a 460 narrow body aircraft, and that was the largest one back then. But now it has been picked by Tata Group, around 470 crore order placed by. Now, the order of 470 crore close to is 70% of the total passenger fleet at current if that we have seen in India, and around 30 planes of these are expected to be delivered in the second half of calendar year 2023. Now, Indian air traffic is forecasted to grow around 7% CAGR till 2041, and this a huge order book that Air India has placed will help them cater to this growing demand of Indian aviation. Also, Boeing had forecasted back in past that Indian aviation industry would need close to 2,200 aircraft over the next 2 decades. Of this, 80% will be to suffice or to subset the growth that is expected in the Indian aviation industry. Now, this is not, however, other airlines have also placed big orders, and as per CAPA, if you see, before this order, close to 800 aircraft order was already placed by Indian Airlines, of which 500 belonged to Indigo, and now Air India has placed an order of around 470. However, do remember that of this 470, we still do not know how many of those new aircraft will be there to replace the older ones, because if you see the average fleet age of Air India's aircraft is close to 9 to 10 years. So to be competitive and to offer better services, they need to replace these older aircraft. So most of this order could be to replace the older aircraft also. Currently, if you see, Indian aviation industry has close to 630 aircraft, of which Air India Group has close to 230, and Indigo has a single is the largest aircraft holder of around 302 aircrafts, and the market share of also Indigo stands at close to 54.9%. But given the fact that we still do not know when the deliveries are expected to come in and how India is looking to solve the infrastructure issue, we still cannot say whether this higher aircraft would lead to higher demand or a more competitive intensity in the industry.
All right, thanks very much, Samir, for giving us all of those details. Let's hear it out from the former ED of Air India, Jitendra Bhargav, as well, who weighed in on the mammoth deal.
Tata's ordering such a huge quantity, this mega order, is basically a reflection that you're making up for lost time as well. Let's not forget, government-owned Air India had no resources. We had not been growing. So one, it justifies the decision of the government to disinvest. Air India wouldn't have been able to place an order even 1/4 of the size had it still been government-owned. So full marks to the government for taking the decision on disinvestment. Full marks to Tata's for going ahead and placing an order of 470 plus aircraft. More importantly, look at the significance of this order. President Macron of France, President Biden of USA hailing the order. What better way of showing to the world that India has arrived in a big way on the global aviation scene. We are no longer talking of an airline with 100, 150, 200 aircraft. 470 is a huge order by any standard. And it only goes on to show that Tatas have a plan in place. India is a growing market. We've been saying this for years now. But the harnessing of this growing market was being done by the Gulf carriers and the Southeast Asian carriers.
Okay, he has also a word coming in from Gautam Shah from Goldilocks Premium Research. Expects the bank Nifty to fall further and remains bearish on banks.
Second half of last year, we saw a phenomenal rally on the bank Nifty. I think we had levels of 44, 500. It was great going. Everything participated. And things just changed completely in the last 1.5 months. I think there is a lot more room to fall. Our initial target was around 39,600, which was tested. Anybody looking at the charts would know that it was the important support. From there, we've seen a bit of a bounce. But the bank Nifty, once again, if you look at the last 5-6 days, it's not been able to take out that level of 42,000. So till that number does not get taken out, we would remain bearish. And we want to believe that eventually 39,600 will break, leading to much lower levels. Again, if you look at the leadership, look at ICICI Bank and SBI, two of the poster boys of the last 2 years, they have stopped outperforming. And you know, HDFC Bank as a stock has just got range bound and it's just languishing just below lifetime highs. Axis Bank, IndusInd Bank, and the PSU banks, obviously the BOBs and the Canara banks of the world, they all have negative setups. So I think banks and Reliance put together would be the reason for the market to break down if it were to happen sometime in the near term.
Adani Group of companies, they've been the eye of the storm. Are you satisfied with the response the regulators have given?
I will not buy for a moment anyone saying Indian governance or their regulatory mechanisms are not good enough. Not at all. In fact, in very many areas, we seem to be leading the way in terms of good governance. I am confident that the Indian regulators are well seized of what they have to do, and they will do the needful where and when necessary.
All right, capital goods as a sector is looking very promising. What are Nishchal Maheshwari's top fundamental bets within that space? Hear him out.
On the capital goods side, our top picks remains to be Triveni Turbine and Thermax in that sequence. And infrastructure, our top pick remains to be in the large caps, Larsen, and then PNC Infra in the mid caps. So the whole sector we like a lot actually.
Okay, let's talk some of the other buzzing stocks. And yesterday, definitely, it was UPL. UPL has been consistently on a roll. In fact, if we can just bring up the last 10-day or 15-day chart of UPL, not just yesterday's price action where the stock held out by 4%, but the last couple of trading sessions. That, of course, is the 1-month price action. But the bout of the move has really come in the last 1 week or so, holding up almost 7% for UPL. Naresh, on the charts, what's been your reading?
So UPL has been making this sideways move over a long period of time now. If you look at the last almost 2 years, every time the stock has gone to 800, it has been a problem zone. It has corrected sharply. Closer to 650, 700, it forms a base. Now, again, a few days back, we had seen a sharp correction from 770 to 700, and now we are back to 770. But 800 remains the major resistance. So once it starts sustaining above 800, that is where we'll call it a long-term breakout. So I'll wait for some more time before taking a call on the stock.
Right. Well, yesterday, while of course ITC as well was the one large cap that did show leadership, held out by 3.25%. Reliance as well made a decent move, a 2% dash coming in there. But it's the PSBs which once again made a comeback. So be it a CUB, be it a PNB or a Canara Bank for that matter. Kunal, getting back into action, PSBs?
Sort of. I would not say full throttle, but then I think these stocks are trying to make a clawback again. At least the good part is that these stocks have stopped falling. The correction has halted for these stocks. The rise is very marginal, I would say, for these stocks because what we saw in the month of September, October 2022 was a more of a cohesive rally. Where all of the PSU bank stocks they participated, whether it was large cap names like SPI, Bank of Baroda, or even the mid caps and the smaller cap names. Right now, it's a bit more fragmented. I think it's only the likes of Bank of Baroda and Canara Bank which is showing a tad bit of more outperformance. Most of the other stocks, the UCO banks, etc., these stocks are still underperforming or going into a listless price action zone for themselves. So I would sense that this could be a phase of the markets where it's always better to stick to large cap names or more prominent names from the individual sectors. Once these stocks start to get into a second leg of action mode where these stocks manage to give a breakout for themselves, maybe the individual 50-day moving averages could be a good benchmark for them. That's where I would believe that the action would probably shift to mid caps and small caps.
Okay, let's move right on then. And it's new age tech stocks. They've been in the spotlight, and amid the volatility and commentary about turning profitable, brokerages have tweaked their stance and even tweaked their target price based on the growth visibility. Let's take it across to Sharad, who joins in to tell us which stocks have seen the maximum upgrades and which have seen the maximum downgrades and target revisions. Sharad.
Well, yes, in focus we are having the new age tech stocks, and let's just divide their performances of quarterly numbers into two portions. And of course, PB Fintech and Paytm came out with a very strong set of numbers. Now, looking at the target price as well, these two stocks were in focus, with Macquarie also doubling their target price and coming in to almost 800 rupees per share for Paytm. And for PB Fintech also, Morgan Stanley raised the target price, and overall it's gone up to almost 750 rupees per share. No major upgrades coming in for Delivery, Nykaa and also Zomato. But now let's look at the downgrades, where we are seeing the maximum amount of downgrades happening, and of course slight downgrades coming in for Paytm and for Zomato on a smaller basis from domestic brokerages. But going ahead, if you look into it, PB Fintech has a sizable kind of a cut coming in for the target price from Kotak Institutional, while Delivery also fell almost 330 to 275 rupees as per IFL Institution. But the biggest brunt being seen by more than 50% cut is Morgan Stanley, and this is coming in for Nykaa. But now let's look at the average target price as well. Now over here itself we see strong upgrades coming in for Paytm and PB Fintech. And if you look at the stocks such as Zomato, Delivery and Nykaa, that is where the target prices have been falling, and Nykaa again bears the biggest fall actually in the target price on an average basis as well, as per Bloomberg data.
Okay, and here's Safir Anand, in fact, strategist and investor. He likes new age tech companies and holds Paytm as well as Zomato and Nykaa in his portfolio. Hear out what his opinion is on this entire space.
For me, there are a lot of factors that have made me positive on new age companies, and the company that you're talking about is one such example, but there are others as well. The first factor that I see is that if first of all is valuation, which is the sacrosanct principle for investing. A lot of these companies, when they raised capital, they were at insane valuation. There was almost like you were in a frenzy to miss out if you did not participate, and everybody wanted to own these shares without understanding anything about them. And suddenly they discovered that there is a disconnect between the companies and the valuation, and then these all came tumbling down 60-70%. So that itself became a positive catalyst, because that is intrinsic in the principle of investing, that you will look at the price of a company and the value that it offers. When you look at these businesses, sometimes these businesses may be losing cash in the pursuit of growth. So their balance sheets look optically very different from the situation where they decide then that we do not need any more growth capital, and now we will be generating a huge amount of cash. This happened in Amazon also, and this is likely to happen in some of these new age companies. I will continue to be a believer in some of these companies if the management do not mess up. And if the management mess up, I have the choice of moving out instantly. Well, at the risk of not being a SEBI registered advisor and therefore talking about my personal portfolio, I now own Paytm, I now own Nykaa, and now I own Zomato. All three stocks are in my portfolio.
All right, to more newsmakers then, and this one's making headlines. Abu Dhabi Investment Authority, Goldman Sachs and the likes of Carlyle, we understand, are in active discussions with TVS Motor to invest $300 to $350 million in the company's electric vehicle arm at a potential $3 to $3.5 billion valuation. Let's take it across to Vinny, who has all those details. Vinny.
Absolutely, it seems like TVS's EV arm is actually looking to get some fund infusion, and we could see the checks coming in from ADIA, Goldman Sachs, Carlyle, for its TVS Motors EV arm, which is for a valuation of around $3 billion to $3.5 billion. Now, obviously, if this deal actually takes place, TVS Motors, this arm will actually become the most valuable two-wheeler EV arm in the country. And currently, let's not forget, the market valuations for TVS Motors is around 51,200 crores. Now, TVS Electric was actually an arm which was incorporated in December 2021, which is an investment of around 1,000 crores. And it's the second largest electric two-wheeler maker in the country in terms of the volumes coming in. Also, they have raised a stake in Ultraviolet Automotive Private Limited in the electric vehicle space to around 34%. They bought 70% stake in British e-bike maker EBCO as well, which is a UK company as well. So keep an eye out on this one. If this deal goes through, it's surely going to be the most valuable companies in terms of the electric vehicle space, two-wheeler electric vehicle space. And the deal structure seems quite similar to the ones that we've seen coming in Tata Motors EV with TPG investment in the company as well. And this is according to the ET reports that we've seen coming in.
Watch out for a TVS Motor on the back of that news, clearly pushing hard when it comes to EV. All right, let's get a move on then and focus in on one stock that has been quite an outperformer within the large cap space. Reliance Industries has been proving its might. Yesterday, the stock wrapped up 2.3% higher at 23.78. Is this an indication of a further breakout on the charts? Let's understand that better. Kunal joins in with the analysis. So is it a yes or a no, Kunal?
Thank you, Aman, for that. I think it's an emphatic yes for Reliance Industries because this is more of a very coherent kind of an interesting indicator breakout. Now, this is the charts for Reliance Industries spanned over the last 12, 13 months approximately from 2022. Now, this is the indicator which is more important to map out for Reliance Industries. It's more known as a trend indicator. Now, every time a trend indicator gives a breakout, so for example, this was seen in June 2022 where the stock was almost at 2,500 levels. This was the point the breakout happened, and look at the start of a trend for the stock. This was almost like a 10% swing for Reliance Industries, where from 2,500, 2,550 mark, the stock went up to as much as 2,800 levels. This was seen in July 2022 when the stock started to get into a consolidation, and then post that consolidation, confirmation of a breakout, we saw the stock moving towards levels of 2,750 mark. Similar breakout was seen in the month of September, where the stock bottomed out. Look at this consolidation for the stock, and then post the breakout, the stock started to get into a trending phase, and in a matter of 1.5 odd months, the stock confirmed a 10% swing. Now, this is exactly very similar in terms of the price structure. So as you can see, the previous instances, the stock goes into a correction, consolidates for almost 2 to 3 weeks, and then starts to get into a trending breakout. This is again a very similar kind of a breakout. Now, what's more interesting is the data for Reliance Industries on the futures front. Now, this yesterday's move is confirmed by the kind of sudden change in the open interest. So as you can see, the last 5 days, there's hardly any change in the open interest for Reliance Industries, just about 2,500 contracts plus or minus for the stock. And yesterday's data indicates that there's almost a 16 lakh unwinding of contracts for Reliance Industries. So that itself indicates that there was a major short covering which happened on the stock. Couple this up with the indicator breakout, this indicates that this could be a strong 10% up move over the next 2 to 3 months.
Okay, Kunal, I'll take it from there. Much like Reliance Industries, which Kunal believes is headed for a breakout, Niresh wanted to understand whether HDFC Bank could do the same.
So HDFC Bank is something which one has to watch very, very closely, given that the stock is back to 1670 today. Now, when we look at a little longer term time frame, when the deal got announced, the merger got announced, the stock made a top of 1722. In the month of January, we made a top around 1700. Then we go back a little far in October 2021, we made a top around 1725. Then in January to February 2021, the stop was at 1640. Now, the 1650 to 1700 band has been a resistance, and over the last 3 months, we've been getting closer to it. So, if we break out above those 1700 mark, the last range for the stock is say from 1300 to 1700. A technical target price after that breakout implies a 400 plus pointer move. So that would imply a more than a 20% move over the next few months. So technically, this has become a stock which could become a leader in the Nifty. So out here, the view is to accumulate between 1600 to 1670. The last swing low for the stock is say 1570. That becomes a stop loss. Add on the way up about 1730 levels. And eventually the stock could take leadership space and go towards 2000, 2200 in the medium term. So HDFC Bank could be the biggest surprise in the whole Nifty, apart from Reliance.
All right, those are some stocks to keep on our radar, but here are the stocks on the editor's radar. Let's talk about two result reactions and how brokerages and the street has reacted. We'll begin then with Siemens, which came out with its numbers. And much like a lot of the other capital goods counters as well, we have seen a marked improvement in their earnings. In particular, you've seen the margins as well scale up for smart mobility as well as for energy. And then the order book at close to 5,450 crore rupees, Nikunj, standing out at record order inflows.
No, they're in a good curve, so to speak, Aman. There is reason to believe that Siemens as a stock, even though the numbers just came during the market hour, I think they came post 3 o'clock, so the market reaction yesterday was hardly captured. I think large part of the market reaction post the numbers is due to be captured today. There are very few companies in the capital goods space also, which are giving you this kind of an visibility and have that kind of an diversified order flow. The stock has done rather well for itself. It's an expensive stock, but not too many companies, Avan, in the market per se can give you such a solid growth even if valuation is expensive. So at a time in generally when there are few pockets of growth, markets will continue to price and continue to pay premium to a company like Siemens because the operating leverage benefit, and like you rightly said that there are a lot of near-term catalysts in the smart mobility business, in the transmission business, which are at play right now. Capacity utilization for a lot of industry is not picked up. So I guess Siemens order book, Siemens business trajectory is here to stay. We are arguing about valuations, but given the current circumstances where a lot of other businesses are suffering, I think this is a stock which is expensive and will continue to remain expensive.
6% in the last one. Macquarie as well has raised their estimates on Siemens. So that's a stock to keep on your radar. The other one is Bharat Forge. Came out with its numbers yesterday and the stock duly reacted. Remember, you had the profits which slumped quite significantly on a year-on-year basis, and now brokerages are going ahead and going for a marginal EPS downgrade in the stock, and Nomura as well has reacted.
Yeah, the risk-reward ratio according to Nomura is not very favorable. I just want to break the entire business model of Bharat Forge just for the benefit of our viewers. And I'm just reading off the numbers from this Nomura report. Large 23% of the business is the global truck business. 20% of the business is essentially in the global industrial segment, and 10% of the business, that makes it about 50% of the total business. 10% of the business is in shale gas, and natural gas prices have come down. This 50% business is the traditional business which is slowing down. They've added new verticals to their business, largely in the business of defense, but that's work in progress. So the traditional business is slowing down. The new business is yet to catch up. So Bharat Forge is going through this transition, and the transition could take a couple of quarters before the real growth actually makes a comeback. If your main business, Avan, is slowing down, the new business, which is small business, will take time before it gets incubated. The good bit is that that business is growing, but it will take some time before it is able to really recoup or benefit the loss in the old business, which means in the short term, I expect Bharat Forge not to fall too much because the defense business is back on track, but it is unlikely to be a ranked outperformer. So if you don't own the stock, you may give the stock a skip simply because the risk-reward ratio in the near term is not favorable. If you own Siemens, in that same breath, you should not sell Siemens because even if the risk-reward ratio is not that favorable because of valuation, the compulsions of this high-growth business will continue to drive the stock higher.
Okay, so can give Bharat Forge a skip maybe if you don't own it, and Siemens continue to hold on. So Aisha, those are the stocks on the editor's radar.
Well, yeah, a couple of stocks there really, everything from a Siemens to Bharat Forge, that's in focus. But what about banks? Here's Dipan Mehta telling us what he sees in the near term for banks.
The merger, I think, has been in the works, but it's just getting delayed. But there's no denying the fact that the underlying fundamentals of IDFC First Bank have significantly improved. Do a quick comparison, I think it is a winner on all fronts, whether it is deposit growth rate, CASA, net interest margin, profit growth, improvement in the balance sheet quality. I think across the board, when you compare IDFC First to its peer group, it's a clear winner. The stock is at a reasonable valuation, a very aggressive management. And I think that amongst the banking stocks, it is our top pick, usual disclosure that we and our clients are invested, and should clearly outperform the bank Nifty and some of the other larger private sector banks and maybe a few of the PSU banks as well. So that is one stock that we're very positive on.
All right, let's find out then some more stocks that are on our chartist radar. And Naresh, we discussed the fundamentals when it came to Bharat Forge, the overall valuation metric, how the stock reacted yesterday to its numbers. What's your view basis the chart performance? Would you believe it's a bit of a skip at the current levels?
So I would look at the longer term chart for Bharat Forge. There have been a lot of expectations from this company, but over the last, say, 8 years, the returns have not been great. The stock made a top around, say, 650 back in 2015, and today we are still at 850, 900 after almost 8 years, 7 to 8 years. So it's not been a great stock. In 2018, the stock made a top at around 800 odd levels. Then in 2021, it made a top around 800. And we've now broken out above that 800, 850 mark, gone sideways for the last almost 3 months in this band of 850 to 920. So technically, simply put, finally after 7-8 years, the stock is trying to make a major breakout move. So it's a huge cup and handle formation. Till the time it holds 830, 850, the view remains positive. I would be watching out for a move above 910. Once that is crossed, that would confirm a short-term breakout and a long-term breakout as well. So consolidation is done, a long-term breakout is on cards. So for now, 830 to 850 remains a support zone. But once it crosses 900, 910 levels, that would confirm that the trend has changed significantly and the stock could take a big move going forward. So in the medium to long term, positive on the stock. In the near term, we'll wait for price action to confirm that.
Kunal, there are two Adani stocks where in general the view is slightly more bullish. One is Adani Port and second is the Gujarat Ambuja. Gujarat Ambuja has not recovered at all from the sell-off, and Adani Port has recovered but is extremely volatile if I look at the intraday graph. What should a trader do?
Well, I would focus on stocks which have been more resilient in that regard. So I think Adani Ports is the only standout stock in most of the Adani group of stocks. Most of the other names, the non-F&O names like Power, Total Gas, etc., Green, these stocks have been extremely volatile, and it's very difficult to try and trade a stock which goes into opening as well as downward circuit. Initially. So, trading these stocks becomes a futile exercise. But I think Adani Ports is something which is resembling more of a stronger name. 420, 424, I think was the low the stock had hit a couple of weeks back when there was a sharp correction. But then from there on, the stock has bounced off quite well. In fact, even in the last 2-3 days, the volatility for the stock is not as sharp as compared to the rest of the Adani group of stocks. Yes, the stock has moved up into a range of 3%, 4%, plus or minus to the previous day's close. But then I think it's still very meager enough as compared to the other kind of volatility for the Adani group of names. So I think Adani Ports is something which I would watch out for. 550 is a good benchmark support for the stock. So closer it is to the 550 mark, the better would be even a short-term trading risk reward.
Naresh, same question, Ambuja and Adani Ports.
So Ambuja looks interesting at these prices. Adani Ports has already bounced back quite a bit. So this dip from 400 back to 335 odd levels is an interesting price point because this was the stock price back in February, March 2022 around the Russia-Ukraine crisis. The low was around 280 levels to 310 levels. So there was no buzz of a takeover. So the whole Adani premium or the whole rally has been taken out. And from March 22, a lot of cement stocks have done well, at least from those prices. So at 335, your risk reward is in place. So would be an accumulate with a medium term view, given that the stock sees a lot of volatility, keeps going into derivative band and coming out of it. At 335, I would say it's a buy, add more at 310 and expect eventually a recovery towards 400, 450.
Jani joins us now, and Himang Jani, early morning, you still dressed up in a t-shirt?
Hi, good morning, Nikunj. Actually, I'm traveling. I'm in Ahmedabad for some personal work, so not actually in office. In fact, I missed that I have interactions. I have to rush back.
No, glad you could join us. So, any chances you're going to get the mithais and sweets back from Ahmedabad for us?
Yeah, we'll be very happy to do that. In fact, Nikunj, if you remember, I had got pork from Surat when I was there.
That time, Himang. I was traveling that time when you sent them across.
No problem. I'll surely make it a point to get some good stuff.
Look forward to meet you in person also. It's actually been a while. We are discussing Adani stocks, Himang, and there are two stocks where in general the interest is high. That's Adani Port and Ambuja. for obvious factors. I mean, Ambuja is not an original Adani group of company, and markets have a association with that company. And second is Adani Port, because it is something where institutional investors have a strong interest and it has predictability in terms of business. How would you approach these two Adani group of stocks where in general the interest levels have been high?
So I think there are two parts to this. One is the recent episode and the kind of news flow in the media highlight that it is getting, and there is intense volatility around that. So definitely that is one part of the story. Other part is, having seen all that volatility news flow, is there any case of value in the stocks which have corrected quite sharply, in the last 3 to 4 weeks? So I definitely think that there is a case for some value in names like Ambuja and Adani Port, but exactly at what point the sector or the names will stabilize, that is something not too clear. Also, this MSCI impact is to a great extent known, and you will see some sell flows around it. But I personally feel, Nikunj, that it would be prudent to stay away from the names till we get a little bit of stability in terms of how exactly it's going to unfold, rather than trying to get into it and find yourself in the middle of intense volatility. So better to avoid at this point.
Yeah, sure.
Let's get in a view then on some of the other stocks that we'll be tracking in today's trading session, and then you have a whole host of stocks that will be on the radar, largely on the back of their quarterly numbers. So for instance, you've got something like a Bata India that will be in the spotlight. Came out with its numbers yesterday post-market hours, a 15% growth in their net profit, revenues at about 900 crore rupees, and there was also Apollo Hospitals that delivered its earnings a little bit disappointing. The margins contracted by about 400 odd basis points to 11.9%. Net profit came in lower by 33%. Revenues, though, were healthy at about 4,264 crore rupees. Any key takeaways from these earnings, Hemang?
So, Avan, I think the footwear stocks across, there is negative surprise, and interestingly, some of these stocks are quoting at a very high P multiple. So within that, we found that Campus delivered a reasonably good set of numbers. The stock has corrected, so maybe one can really look to buy into that. Apart from that, I think the Apollo Hospital numbers were slightly disappointing at the net profit level. The revenue level, they were pretty okay. So maybe this is one stock, if it corrects because of the headline number, should definitely look to buy into it. By and large, what happens typically is that the companies that deliver the numbers in the last leg of this season, they really numbers are typically not that great. So I think it's good that in a way the earnings season is getting over and without much of an issue, and we would definitely be looking to buy into the names where the upgrades are there or the earnings have been good.
Okay, fair enough. Those are some of the stocks that are being looked at. In the meantime, Nuresh, let's get in your take as to what the outlook is when it comes to the entire banking sector. Clearly seeing a smart recovery within the banking space across the board. I know you've constantly flagged off ICICI Bank, but what else is looking attractive?
So, like I've been saying, in the banking space, HDFC Bank is the next one to watch out for. That could be the leader, something which has done nothing for the last 2 years. If you look at in terms of the bank Nifty, it has a stiff resistance around that 42,000 mark. We saw a correction sometime back in January where we broke below that 42,000, which was the support before. And now the recovery on the budget day, we could go only towards 42,000. And over the last 7 trading sessions, we've not been able to go even towards that 42,000 mark. Every time it has gone to 41,700, 800, it has seen a dip back. So for now, once we sustain about 42,000, that would be an indication very similar to 18,000 of Nifty of a trend change. And what could trigger that trend change? It could be HDFC Bank and say a little bit of support from ICICI.
Hemang, there are a lot of new IPOs which are really represented a very interesting business. I mean, I'm just thinking through it. While we talk about Zomato, Paytm, we talk about Nykaa, but the interest is there in a 5-star. Yeah, the name of the company is 5-star, guys. 5-star Financials, a South-based company. I'm just bringing it out for the benefit of our viewers. It is actually 5-star. It's one of the NBFCs, which enjoys a fantastic return on equity. My producer will just fire that one. Second, you got Keynes. That's another IPO which has done rather well for itself in the recent time. Anything in the new space, Hemang, which attracts your attention, which is a niche business, small business, but can be scaled up?
So Nikunj, not looked at detail this 5-star and the other names that you talked about. And my general sense is that the overall interest level across the IPOs has actually gone down, because by and large, we haven't really seen any significant listing gains or, a great story emerging out of it. Maybe partly it has something to do with the overall market itself and the, sentiment around the listed space. So not able to kind of scan through any of the interesting names, but we do feel that the management commentary and the kind of statements which are coming out from the Paytm and Zomato are definitely better than what the market was actually looking at maybe a few months before. So there is some level of interest, having seen a major drop in the market cap, and as we see the operational numbers turning better, maybe there can be some uptick of, let's say, 15-20% for the names like Paytm, Zomato. Yes, of course, there is a large supply which is there and which can come through. But for retail interest, about 10, 15%, 20% move, I think these stocks are extremely good.
Naresh, we've discussed ICICI Bank couple of times, and is ICICI Bank now getting ready? Is it on that launch pad where it could take a leap towards 900? And Kunal, I'm coming right back to you, because in last 1 year, I think there's not been a single day where you've not said ICICI Bank. So Naresh, ICICI Bank.
If you look at ICICI Bank, it last made a peak around that 850 mark with that big gap up move in September 21. And that has been the support point. It made a bottom around that 850 mark to 830 mark in September. And even now, we went below that 840 mark, did not sustain. We went to 800 levels in the fall in December, Jan. And now we are back to that 850, 860 mark again. The recent highs are around 865 to 880. Once it crosses 880, it would be a breakout now. That is the case for the whole Nifty, Bank Nifty, very similar price points. In the end, ICICI Bank continues to be 25% of Bank Nifty. So overall, a good corrective phase is over from 950 to 800. And now could be the next rally. We just need a price confirmation for that.
ICICI Bank or HDFC Bank or both or none?
I would prefer both HDFC Bank as well as ICICI Bank.
No, viewers have appetite to buy only one stock.
One of the options was both.
No, but if somebody has appetite to buy only one stock,
I'll go for ICICI Bank because of the proven leadership the stock has shown in the last 1.5 to 2 years. So I think 2021, the stock, ICICI Bank from the private sector name and SBI were the two strong performers which managed to lead the charge for the Bank Nifty. In the last 3-4 months, when the banking stocks or the private sector names specifically tottered a bit, it was because ICICI Bank started to get into a corrective phase from 950, 960 to almost 800 plus levels. Now when the Bank Nifty is making a comeback, it's one of the major reasons is because ICICI Bank is holding its fort back again and coming back consistently about this 850, 860 mark. So when I look at the last 2 years, 3 years of price action, the relative effect of ICICI Bank on the Bank Nifty, then I believe it makes a lot of sense to go with the proven leader, and I would probably go with ICICI Bank. And also one of the most important technical aspect is that the stock is nearing a breakout of a major trendline resistance. So this 870, 875, where the stock has been trying to retest this level consistently. If it manages to surpass about this level, we could be talking of possibility that ICICI Bank may come back towards the life highs of 950 plus levels as well.
All right, the pre-open rates as well, we'll be tracking when it comes to the markets. It's pretty flat right now, around the 17,940 mark. And for the Sensex, we're in the red. Let's find out what the outlook is when it comes to mid-cap strategies then. And Naresh, what's your mid-cap call?
So looking at Mahanagar Gas again, the stock yesterday came back to 890 levels. It is ex-dividend by 10 rupees. So the stock is again testing that 900 mark. Once it sustains about 900, 910, that would be a big breakout for the stock. So out here preempting it, a stop loss at 870 and a target price of 1050.
All right, Mahanagar Gas it is. Watch out for that stock. And Kunal, what should we watch out for according to you?
So it's a buy on Poonawalla FinCorp. I had flagged off the stock, a couple of weeks back. I think it's a very interesting and a classical breakout, a bullish pennant formation, 50 DMA breakout. In fact, after yesterday's price action move, the indicators have also managed to come back towards a breakout zone. So I believe that this momentum would just accelerate for Poonawalla FinCorp. Would suggest a buy. Targets revised to 350. Stop loss at 296.
Okay, let's tell you what else is happening across the world, outside the world of markets, and the death toll from the devastating earthquake in both Turkey as well as Syria has now crossed 40,000. Rescue teams in southern Turkey say that they are still hearing voices from under the rubble more than a week after the quake. A 5-year-old boy was rescued from the rubble of his home 105 hours after the earthquake struck for the first time. Indian-American US politician in the meantime, Nikki Haley has entered the presidential race in America. The Republican and former South Carolina governor announced that she will be running for president in 2024. Haley is the third Indian-American to seek a US presidential nomination. Nikki Haley's parents migrated to the US from Amritsar. She was born in America as Nimrat Randhawa. And Ford Motor has paused production and shipments of its electric F-150 Lightning pickup due to a potential battery issue. The possible battery issue is being investigated after a vehicle displayed a potential during pre-delivery quality inspections. Ford has not established a timeline for when production and the shipments will finally resume.
Meantime, Airbnb has reported fourth quarter earnings that beat analyst estimates on the top line and bottom line. Revenue for Q4 was up 24% on year. They also said that guest demand and supply growth has remained strong through 2022, saying that it made difficult choices to cut spending during the pandemic, but has modestly increased its headcount over the last 2 years. And within a year of its launch, Reliance Retail's JioMart has halted operations of JioMart Express, according to ET reports. Express, remember, is JioMart's quick commerce grocery delivery service. Users are being directed to JioMart on WhatsApp, where deliveries will take a few hours or even a day, as against that 90-minute delivery service of JioMart Express. And food tech giant Swiggy is gearing up for their IPO, and for that, they are only keeping operations and businesses that yield profits. Hence, reports are suggesting that the company is planning to do away with the kitchen infrastructure business. It's also reported that the company will be selling off their cloud kitchen service business to a company by the name of Kitchenessa.
PSU banks, they had a lost decade, now they are back on track. If I look at the ratios for PSU banks, they have a lot to catch up if you compare them with the private sector.
There's now not just one call anywhere, not even one word anywhere saying, are you planning to recapitalize? No, banks have realized that they can stand on their feet, they can raise market monies from the market, and they realize it actually gives them a better spine with which they can stand up and speak.
In the meantime, D Street has seen 3 major block deals over the last 3 trading sessions, and more block deals are likely to take place in the next few days as well. Pankaj is here with all the cover on D Street this time around all the block deals. Pankaj.
So it's an interesting trend, and what I tried to speak to a lot of dealers is that the talk of the town essentially is which is the next block that's on the round. Now the next 10-15 days, Street is expecting that a lot of blocks would actually come in, and supply has come in on the back of private equity investors or investors that are in cashing out on some of the stocks. So we've seen names like Paytm, which saw some big blocks coming in. Then we saw Coforge, where promoters or Barings private equity sold about 10%. And then we had Phoenix Mills yesterday. Now, the talk of the town is names like Indigo, where promoters want to sell via block. That's the first name that comes into the mind. Names like PB Fintech also do come into the mind because there is certain amount of block that's expected over there. And same is the case with Campus. So these are 3 or 4 names that, one is picking up. Now, since December, the trend had been that blocks were not particularly that great in the market. And that's why probably, the trend that started in November after a lot of blocks coming in. That's something which had stopped, which was once again started. Budget was a major event. That's something which the street is waiting for, and I think that is something which is at the top of the mind of investors. So over the next 7, 8, 10 days, which are the companies that seize block? As I told you, the talk of the town is names like PB Fintech, names like Campus Footwear and Indigo come to the mind of investors when they talk about blocks and likely supply coming in over the next few days.
Hemang, let's get in your thoughts then on the big news for TVS Motor, their EV arm, close to $300 to $350 million check, and you've got potential of ADIA, Goldman Sachs, Carlyle, etc. that are eyeing that stake.
So Avan, if you look at the two-wheeler space, TVS has been a standout performer, and both in terms of stock price as well as quarterly numbers, they've really done pretty well. And on the EV side, they have actually been able to roll out some interesting products, and the disruption risk has reduced. Now, with this EV company, the way they have set it up and the fact that they are getting a certain valuation out of it, if you see more prominent investors coming into it, and if there is a valuation, re-rating because of that, there will be some rub-off on the TVS price also. So I think within the two-wheeler space, though the sector has not been that great, I think TVS is relatively better placed. But at this point, we have a overall overweight stance only on the passenger vehicles. So the Maruti, Ashok Leyland, etc. Those are the names where we have a positive.
Very much, Hemang, for joining in and sharing with us your outlook, and have a successful trip. Okay, let's get right back to the index calls and find out what our chartist views are on the markets this morning. Hold according to Naresh, but Kunal as well as Kush believe that it's a buy recommendation on the index this morning. Remember, yesterday we wrapped up the day above the 17,900 mark, perhaps indications of maybe further upside, and that's what the Moodometer is indicating. Banks, that was really the comeback story yesterday. No surprises then to see a buy recommendation. That's what majority of our chartists are picking out this morning, and that's exactly what the Moodometer indicates.
Okay, IT has done rather well this year. The IT index is the best performing index. Infosys, TCS, they've done rather well. Hemang, is the IT space now getting split right in the middle? You got TCS and Infosys on. Hemang is gone. Yes, Avan thanked him. My bad. He had to go for a meeting. How can I forget that?
You were busy with your green tea.
Yes. It's refreshing to enjoy that cup of green tea. It's habit which just keeps us going. Okay. Now that I know the Hemang is not there, I can throw a pointed question to Kunal. And Kunal, why is Wipro underperforming in this market? I mean, the IT index has made a comeback, but Wipro is really at the bottom of the barrel.
Yeah, I think it's both ways, because Wipro also underperformed on the way up when so from 2020 lows. I think Wipro was the last mover, or the very late mover, where it moved up from 370, 375 to I think as much as 550 plus levels for itself. So that was a late move on the upside. Doesn't come as a surprise that this time around as well Wipro is underperforming. So I think it's when the confidence for the entire IT stocks or the IT sector overall gets into a very strong uptick mode. It's that time when the stock of Wipro starts to get into a breakout mode. Add to that, even I think the likes of Tech Mahindra, I think very similar kind of a chartical behavior. The stock was an underperformer. I think if I'm not wrong, in July, August 2021 is where the stock had started to get into a breakout mode, and in a matter of 2 or 3 months, the stock had given returns of more than 50%, 60% that time, and then the stock went into a corrective phase. So again, this doesn't come as a surprise that Wipro and Tech Mahindra, they continue to lag as well as underperform.
We've discussed a lot about Reliance this morning. We've discussed a lot about HDFC Bank this morning. But Reliance coming back into action is good news for the market. It is good news for the Nifty. It is good news for everybody. This week Reliance is up 1.5%. But what is important is that the recent leg of underperformance in Reliance is getting checked. So Naresh, it goes back to that basic question. If you have to choose between Reliance and HDFC Bank, Will it be Reliance or will it be HDFC Bank?
So in terms of the technical structure, it would be HDFC Bank because that is the one which is closer to an all-time high. Reliance Industries is still a bounce back.
Okay. Kunal, we've discussed ICICI Bank versus HDFC Bank with you. Reliance versus HDFC Bank, and why?
So I would prefer Reliance in that aspect because of the recent or the tendency of the stock to get into a breakout, as I showed in the charts as well, that the stock saw major short covering. And when we see price action, when we see breakouts, when we see indicator moves, and that when it gets coupled with a sudden shock to the short traders, I think that's a stance where traders or the stock changes its trend completely. So I think in that regards, Reliance Industries could be a stock which can start to trend up significantly higher. And we know the impact of Reliance Industries, that whenever the stock performs or underperforms, it leaves a very strong impact to the benchmark Nifty as well.
Okay, just looking at a couple of other stocks as well, which are going to be in focus. While, of course, yesterday it was ITC, it was UPL, which has been seeing a consistent build-up of late. And then, of course, PSBs as well made a jump up. But this morning, as we step into trade, it's an absolutely flat start. That's what the pre-open rates are indicating. Just no move at all on the Nifty or the Sensex. Let's see which way we actually head from here. A lot of earnings reactions. You have ONGC, Apollo Hospitals, Vodafone Idea also came out with its numbers way post market hours, when the losses have and debt for that matter have only increased. The ARPUs though have managed to improve and seen an uptick of about, I think, 135 odd rupees. That's where they stand. That's the set of weak numbers for you. PI Industries, Bata as well added to that list. ONGC, although the numbers are in line, let's see, not expecting a very positive reaction there. But then good numbers from a Torrent Power, good numbers from an NMDC. You've got Prestige Estates. We'll chat with the management as well in the due course of the show. The EBITDA has jumped up nearly about 55%. And then, of course, Aster DM, EID Parry. These are all numbers that the street is going to be reacting to, Nikunj, on the positive side.
First rates, and we went home yesterday on a strong note, but SGX is indicating that we could not be in for a great start, so to speak. So let's look at where markets are in terms of the total pullback from yesterday's high point. If SGX is anything to go by, if pre-open rates are anything to go by, looks like we are in for a very moderate kind of a start, and it's a very flat start with no real fireworks here or there. Not very impressive. You close at the highest point of the day, the very next day when you come back, there is very little follow back. You want the market to exhibit a lot of force and gusto, which I think is just the missing link for just about the Nifty per se. First rates, I mean, there's nothing which is popping up on my screen which could be called as wow. Yes Bank flat. Vodafone, Aditya Birla News in the Economic Times that the promoters could look at capital infusion. That's not helping. Zomato 1% up. Nothing large actually on my screen which can just spark any kind of an excitement. Look at Reliance. We talked about Reliance extensively, but what, 0.5%, not even 0.5% higher for Reliance. Adani group of stocks, no. HDFC Bank, no, it's gone down also. So Adani Enterprises is the only one which is holding strong. PI Industries is looking okay. Aisha Motor post numbers. You want to look at Siemens and Bharat Forge. Bharat Forge has got a series of downgrades post numbers. They came during the market. Our market reacted to those numbers yesterday, and I think a little bit of pending reaction is still due. Thought as much. 4% lower for Bharat Forge. Siemens, the reaction I don't think was captured yesterday. Without looking at the price, I can tell you that it's going to be a good start for Siemens. 31.42 for Siemens, up by about 12 rupees. So it's on expected lines. Luckily, there is no large casualty there. Adani group of stocks are stable. Reliance is the one which is now picking up some strength. So can Reliance really do the trick for the Nifty? Let's go back to the Nifty again. It's a flat start, but what I like is Reliance. What I don't like is that there is no follow-up buying in banks. Aisha?
Yeah, no follow-up buying in banks, although I just want to check in on the 3 PSBs which were up on a tear in yesterday's session. So Can Bank, PNB, City Union Bank, they were all holding out. Those stocks will just come a few on your screens. Flattish, a move coming in there. ITC and UPL were the other big winners. Let's see whether they are seeing any follow-through price action or not. A lot of earnings, and let's start off with ONGC first, wherein the revenue has come in flat. The EBITDA is higher by 8.5%, profit down 14% on a sequential basis. Flatter move coming in for ONGC. Apollo Hospitals as well, wherein the earnings are below below estimates. Margins have seen a slip of 420 basis points in a year-on-year basis. Vodafone Idea then, wherein the debt and losses have only increased, although the ARPUs have now improved to 135 rupees, flat for Vodafone Idea as we speak right now. For Bata as well, it's been a soft quarter. Indiabulls Housing, the asset quality only continues to deteriorate. In fact, the AUMs are lowest in about almost 28 quarters. GMR Airports EBITDA hit of 26%. Radico Khaitan, the EBITDA has come in lower by about 19%. In fact, I think after many quarters, the liquor companies are actually seeing a hit on their EBITDA. We saw a similar trend from both UBL and now Radico Khaitan as well, lower by 2.5%. HEG as well, weak earnings there. The expansion plans have now been delayed to April 2023. And then good numbers from Torrent Power, good numbers from PI Industries, NMDC. Earnings were largely in line. Margins have come in at near about 31%. PI Industries has gapped up 7% this morning, so that's seeing a very, very strong reaction. Torrent Power is the other one. They've declared a dividend of about 22 rupees per share. Revenues have jumped up 71%. 8.5% is the gap up that you're seeing on Torrent Power, and earnings reaction coming in there. Biocon as well, and record quarter for them too. The revenues for biosimilar business have been very, very strong. Biocon also holds out 1.5% as we speak. EID Parry, Prestige Estates, GMDC, Aster DM, Shilpa Medicare. These are a couple of other positive numbers, and you can see quite a fair bit of green tick coming in on most of these names. But Kunal, at an index level, nothing has happened.
Yeah, nothing has happened, but I think it's a good start when we look at the market breadth. A lot of stocks are seeing a follow-through price action. A lot of stocks are holding back above the 200 moving average after a breakout. The stock which I would look to trade, of course, other than Reliance, would be ICICI Bank. The stock is just about on the verge of a breakout of this, massive triangular, downward trending triangular pattern. So I would believe that if the stock holds past about the 875 mark, this could be a big breakout for ICICI Bank.
All right, Naresh, let's get in your take then. There are some incredible performers in today's trading session, like a Torrent Power reacting to their numbers. Anything in particular that stands out as your first trade?
So the first trade continues to be Mahanagar Gas. The stock is at 890, ex-dividend of 10 bucks, so at 900 roughly. If we were to look at it, 910 is a breakout. So continue to add positions here, would add more about 910 levels.